What if you could wake up every morning knowing your time is truly your own? No alarm clocks tied to work deadlines, no rush hour commutes, just the freedom to live life on your terms. Sounds like a dream, right? Well, what if I told you the secret lies in owning the right assets? Assets that work for you, even while you sleep? Financial independence isn't just for the lucky few. It's achievable for anyone willing to build a smart portfolio of income-generating investments. From tangible opportunities like real estate to high-impact intellectual properties like copyrights and patents, we'll uncover 7 game-changing assets that can transform your financial future. This isn't speculation. We're talking real numbers, real stories, and proven strategies. By the end of this video, you'll walk away with actionable steps to start building your never-work-again lifestyle. Ready to unlock a life of endless possibilities? Let's get started. Asset 1. Stocks. Owning shares in high-quality companies allows you to benefit from their growth and profitability. Stocks represent ownership in a company, and by purchasing shares, you own a portion of that business. As the company grows and profits, so does the value of its shares. Additionally, many companies distribute a portion of their earnings to shareholders through dividends. This combination of price appreciation and dividend income makes stocks a powerful tool for wealth creation. Stocks historically offer higher returns than many other asset classes, averaging around 10% annually, according to the S&P 500 Index's long-term performance. In fact, Warren Buffett has famously championed the power of equities as a wealth-building tool. One famous example is Ronald Read, a Vermont janitor and gas station attendant who quietly amassed an $8 million fortune by investing in dividend-paying blue-chip stocks. Read lived frugally and reinvested his earnings into companies like Procter & Gamble and AT&T, proving that consistent investing, even in small amounts, can lead to substantial wealth over time. Another example is Grace Groner, a secretary who invested $180 in Abbott Laboratories stock in 1935. By reinvesting dividends and holding her shares for decades, her modest investment grew to over $7 million by the time of her passing. Her story highlights the power of patience and long-term investing. Stocks provide a unique opportunity to grow wealth over time. Through consistent investing, reinvestment of earnings, and a disciplined approach, ordinary people have transformed small sums into life-changing fortunes. Begin by investing in companies or index funds that align with your goals, and let the power of compounding work its magic. Fun fact: did you know that a $10,000 investment in Amazon stock in 2003 would be worth over $1.5 million today? Asset 2. Real estate. Real estate is a classic wealth builder with tangible benefits. From rental properties to REITs, real estate investment trusts, real estate can provide steady income through rental yields and capital appreciation. According to the National Association of Realtors, the median price of existing homes in the U.S. rose by 5.5% annually over the past decade, showcasing its reliability as a long-term investment. Wealthy investors often credit real estate as a cornerstone of their portfolios. Take Donald Bren, one of America's richest real estate moguls, whose Irvine company transformed Orange County, California. Bren's strategy of acquiring and developing prime land has created a portfolio valued at over $17 billion. His success underscores how strategic real estate investments can create generational wealth. Another compelling story is Barbara Corcoran's rise in the real estate industry. Starting with just a $1,000 loan, she built the Corcoran Group, which she sold for $66 million. Her story illustrates how real estate isn't just for the already wealthy, it's an avenue for creating substantial success from modest beginnings. Asset 3. Mutual funds and index funds. If individual stock picking isn't your forte, mutual funds and index funds are great alternatives. Mutual funds and index funds are powerful tools for building wealth, offering diversification and professional management. A mutual fund pools money from many investors to invest in a diversified portfolio of stocks, bonds, or other securities. Index funds, a type of mutual fund, aim to replicate the performance of a specific market index, such as the S&P 500. making them a simple and low-cost investment option. By investing in mutual or index funds, you gain exposure to a wide range of assets without having to pick individual stocks. Professional fund managers oversee mutual funds, while index funds follow a passive strategy by tracking market indices. This diversification reduces risk and provides consistent, long-term growth potential. Jack Bogle, the founder of Vanguard, created the first index fund in 1975 and transformed the way millions of people invest. His philosophy of minimizing costs and focusing on long-term growth allowed ordinary investors to build substantial wealth without the complexities of active stock picking. Even Warren Buffett once famously bet $1 million that a low-cost S&P 500 index fund would outperform a portfolio of actively managed hedge funds over a decade. Buffett's chosen index fund returned an average of 8.5% annually, significantly outperforming the hedge funds, proving the power of passive investing. Mutual funds and index funds provide an accessible way for investors to participate in the market, regardless of their experience level. With consistent contributions and patience, these funds can help ordinary people achieve financial independence. Start by exploring low-cost index funds or mutual funds that align with your investment goals, and let the magic of compounding work in your favor. Asset 4. Bonds. Bonds are a low-risk way to earn steady income. Government and corporate bonds provide predictable interest payments, making them a staple for retirees and conservative investors. Data from the Federal Reserve shows that the average yield on 10-year Treasury bonds was around 3.9% in 2023. Bonds also act as a hedge against market volatility, offering stability during economic downturns. Consider the legendary fixed-income investor Bill Gross, often referred to as the Bond King. Gross co-founded PIMCO and managed one of the world's largest bond funds, overseeing nearly $2 trillion in assets at its peak. His mastery of bond investments helped investors earn steady and substantial returns over decades, proving that bonds can be as lucrative as they are stable. Gross's ability to time bond market movements and identify undervalued opportunities made him a pioneer in the field of fixed-income investing. Another notable example is Warren Buffett's strategic use of bonds. During the 2008 financial crisis, Buffett purchased $8 billion in corporate bonds from companies like Goldman Sachs and General Electric, securing favorable terms including high yields and stock warrants. These investments not only safeguarded capital but also generated significant returns when the market stabilized. Diversify your bond portfolio to include both long-term and short-term bonds to balance risk and reward. Asset 5. Cash and cash equivalents. Cash is king, and it's not just a saying, it's a financial truth embraced by both everyday savers and the ultra-wealthy. Rich individuals and families often maintain significant cash reserves for one key reason: flexibility. Cash provides the ability to act quickly on lucrative investment opportunities, whether it's acquiring undervalued stocks during a market dip, purchasing real estate at a bargain price, or funding a startup venture. For instance, Warren Buffett's Berkshire Hathaway is known for maintaining large cash reserves, often exceeding $100 billion. This strategy allowed Buffett to make bold moves during the 2008 financial crisis, such as investing $5 billion in Goldman Sachs, a deal that netted billions in profit over the years. Another powerful example is Elon Musk's use of liquidity during Tesla's early days. Musk invested nearly all of his $180 million payout from the sale of PayPal into Tesla, SpaceX, and SolarCity, leaving himself with just enough cash to cover personal expenses. His ability to commit cash to his ventures ensured their survival and eventual success, making him one of the wealthiest individuals today. Beyond investment flexibility, cash reserves serve as a financial safety net. According to a 2023 Bankrate survey, 57% of Americans can't cover a $1,000 emergency expense, In contrast, wealthy individuals prioritize liquidity to ensure they can weather economic downturns, unexpected expenses, or sudden income disruptions without stress. Asset 6. Intellectual property, patents, trademarks. Creating intellectual property can be a game changer. Think patents for innovative products, trademarks for unique brands, or even royalties from books and music. Intellectual property, IP, is one of the most powerful assets in today's knowledge-driven economy. Patents, trademarks, copyrights, and other forms of IP can generate consistent revenue through licensing and royalties while offering protection for unique ideas and innovations. IP provides ownership rights over creations and innovations, enabling individuals and companies to monetize their work for decades. Unlike other assets, IP often requires an initial investment of time or money to create, but can deliver passive income long after the initial effort. Think of it as planting seeds that grow into a forest of revenue streams. One of the most famous IP success stories is that of George Lucas and the Star Wars franchise. When negotiating the deal with 20th Century Fox for the first Star Wars movie in 1977, Lucas famously accepted a lower upfront payment of $150,000 for directing the film in exchange for retaining the merchandising and sequel rights. At the time, merchandising for films was not considered a major revenue source. However, this decision paid off beyond anyone's expectations. By 2023, the Star Wars franchise had generated over $20 billion in merchandise sales, including toys, action figures, and games. This strategic move not only cemented Lucas's fortune, but also set a precedent for the importance of retaining intellectual property rights. His savvy approach turned Star Wars into a cultural and financial juggernaut, ultimately leading to the $4.05 billion sale of Lucasfilm to Disney in 2012, a deal that further highlighted the immense value of owning IP. J.K. Rowling's journey is another great example of the transformative power of intellectual property. In the 1990s, Rowling was a single mother living on welfare when she wrote the first Harry Potter book. Fast forward to today, and the Harry Potter franchise has become a global phenomenon, generating an estimated $25 billion in revenue from book sales, movies, merchandise, and theme parks. The 7-book series alone has sold over 500 million copies worldwide, making it one of the best-selling book series in history.
In 1997, 500 million copies later, the Harry Potter series had forever changed the publishing industry.
By retaining control over her rights, Rowling ensured that she benefited directly from every adaptation and spin-off, including the blockbuster movie series and the Wizarding World of Harry Potter attractions. Her story illustrates how a single creative idea, coupled with strategic IP management, can turn an individual into a billionaire and leave a lasting cultural legacy. Asset 7. Raw materials and commodities. Raw materials and commodities such as gold, silver, oil, and agricultural products are excellent hedges against inflation and economic uncertainty. These tangible assets often retain value even during market downturns, making them a critical component of a diversified portfolio. Commodities derive their value from demand and supply dynamics. When demand increases or supply decreases, prices rise, providing an opportunity for investors to benefit. For instance, during periods of inflation, commodities like gold often surge in value as investors flock to it as a safe haven. One of the most notable success stories in commodity investing is Jim Rogers, co-founder of the Quantum Fund. Rogers famously predicted the commodity boom in the early 2000s and invested heavily in resources like gold and oil. His strategic bets resulted in significant returns, reinforcing his reputation as a commodities expert. Rogers' latest estimated net worth is about $300 million. Keep an eye on renewable energy materials like lithium and cobalt, as they are gaining traction as demand for electric vehicles grows. Lithium demand, for example, is projected to increase by 25% annually through 2030, making it a promising investment area for forward-thinking investors. Owning these 7 assets can unlock a life of financial freedom and independence. Start by evaluating your current financial situation and prioritizing the assets that align with your goals. Remember, the journey to financial independence is a marathon, not a sprint. Each small step you take brings you closer to the ultimate goal. If you found this video helpful, don't forget to like, subscribe, and share it with someone who dreams of financial freedom. Let us know in the comments, which asset will you prioritize first?